Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen, and today, once a week here on Monday, we will have a short session and analysis of cycles in current main global markets. So what's up for today? I want to do a special session. So instead of directly looking on the main markets and global indices, what we did during the last weeks for cycle analysis, it's also important to put alternative or other data sets into the mix. So therefore today's session is one of those sessions where I will present a new data set which might be interesting for analyzing global markets and cycles, and that's what we will do in this session today. So stay with me for the next 20 minutes to enjoy a little bit how to apply cycle analysis. We will repeat a little bit the basics on cycle analysis while in parallel using current data sets so that you also get a clue on how to analyze these in the real data set. So what data set is prepared for today? I want to speak about the Baltic Dry Index. Have you heard about it? Have you ever heard about the Baltic Dry Index? Maybe drop me a note in the chat section. As you know, we are live. So at the end of this session and in between, I will also monitor your questions. So feel free to drop in any questions and I try to get back to your points while we are talking here. So the Baltic Dry Index. Let's get into it. What is the Baltic Dry Index and what has the Baltic Dry Index to do with cycle analysis? Okay, I mean, there's lots of content on the web where you can look up what the Baltic Dry Index is, but in general, and that's what highlighted here on this website, it applies the supply of large cargo ships and matches that with the demand to utilize the ships. And the result is a current price on this index. So it matches the demand to transport cargo across the global seas while taking into account the available supply. So if the demand goes high and the supply is only small, then prices will go up. So it's an own market monitoring global supply and demand on shipping routes and cargo traffic. So that's the Baltic Dry Index. And why is it important if you analyze global markets? So in general, the Baltic Dry Index is also seen as a leading indicator. And that's a key point I want to make always, that it's not only important to analyze the raw data set like the global market, stock market indices, because they are, in the end, they are a reaction on something which might have already been happened before. So the stock market indices are lagging indicators in general. So it's always interesting to look out for kind of leading indicators, which, if you follow the arguments from some researchers, the Baltic Dry Index could be. So I'm not argumenting from a scientific perspective if it's a leading indicator or not. You can look up a lot of research on why economic researchers think that the Baltic Dry Index has a leading function on main markets. So for example, if you're interested in have a follow-up read, so for example, this paper here has done a lot of work on the Baltic Dry Index as a predictor of global stock returns, commodity returns, and global economic activity. It's around 10 years old, but however, it's still valid, and the outcome of this paper is that it shows from a scientific perspective that there is a high correlation between the leading perspective of the Baltic Dry Index and the global stock returns. So there is a lot of evidence out there that you can use the Baltic Dry Index as a leading data set in general, so for global markets. So that's the point, and that's always interesting, or I want to encourage you to, whatever asset classes you're interested in, you should look out for leading data sets, which often is not the raw data set you're interested in. So there might be different ways, but for today, I want to get into this Baltic Dry Index with you. So this document is available on the web, so you can find it, look it up. It's a free paper, which you can read on your own. This is not related to cycle analysis, but it shows you, or it gives you confidence that you're working with some kind of leading information on the markets. So while we have now a common understanding of what the Baltic Dry Index is, and it's measured once a day, so we get daily data on the Baltic Dry Index, so we are able to pull up the data of the Baltic Dry Index, right? So it's measuring the individual supply and demand on large cargo size assets which ships around the world. And as said, so the importance is related that it helps to understand and predict market trends. And that's what we're looking for. So the question I want to get into with you now today is, if we have a leading data set which might be able to predict market trends found out by other researchers, not by us, so this would be a kind of ideal data set to look for, do we find cyclic behavior in this data set? If the answer would be yes, and if we find dominant cycles in this leading data set, this could be helpful to do projections and predictions on the lagging stock market. Okay, so that's exactly the purpose I want to do with you today. Let's see if we find cyclic behavior in the Baltic Dry Index. So how to do that? I mean, that's now basic cycle analysis. You know how to do it. If you're new to the foundation or to cycle analysis, we are providing a basic tool set to analyze cycles, which is here our web-based or cloud-based tool and infrastructure, which every member of the foundation is able to use. So what I'm showing here can be done by any member of the foundation with using the tools provided by the foundation. So no black box here. And just said, if you're also new to this channel, we are doing here digital signal processing. So we try to detect cycles in a data set by applying modern digital signal processing, pre-processing, detrending, frequency analysis, Fourier spectrum analysis, and then bringing this back to this user interface, which should help you get an easy view on cycles. So we don't get into the math of it. That's what the application. So we're back online. Sorry for the disruption of this stream. But here is the raw data set for the Baltic Dry Index, which we can now see here on our cycle analyzer, right? So this is the raw data of the Baltic Dry Index. We see in the current behavior, it has ramped up, which is in alignment with anyhow the current market behavior. So, and you can upload this data set by your own. So this is not automatically there, but I have uploaded this in my data set here doing the Baltic Dry Index. There are lots of possible ways to upload this data set here. No, this is the wrong data set, so I need to get back to the Baltic Dry Index, which is this one here. I will then load the available data for the last 10 years, update the cycle analysis. So we will start with the cycle analysis on this full data set now, okay? So cycle analysis works now by looking up the spectrum if we provide the digital signal processing and look for peaks in our spectrum, which is shown here at the bottom of chart. This is the result of the cycle analysis of the last 10 years of the Baltic Dry Index. And if you have followed the last session, I explained to you that sometimes you are not able to see peaks in a cycle spectrum chart. And if this is the case, then it seems there is no dominant clear cycle which could be seen or detected in the data set. So therefore, you should not squeeze out cycles in a data set if the spectrum does not show these peaks to you. So, but today we have a clear situation that if you look at this spectrum, there is a clear peak in this spectrum chart, right? So if you look here in the middle of this spectrum, we have a clear peak which stands out in comparison to all other little peaks in the spectrum here. So let's look up what this really individual cycle peak looks like. So it is detected with a length of 143 days, a very high Bartels score, which means that it has a lot of a high statistical significance in the amount of data we have analyzed. So we validate by two means. One is the spectrum analysis based on frequency and Fourier algorithms. And the second algorithm is based on statistic analysis, which is where the Bartels score comes from, to see if the repetitions are valid in the data set. So if it's detected in the spectrum, which is the pure spectrum chart, and has a high Bartels score indicated by the green triangle here, we have confirmation by two independent methods. And then the strength is another indication of how important this cycle is in regards to the time frame you're analyzing and the amplitude. So the impact of this cycle on movements of the data set, the Baltic Dry Index in this case. And we also see a high strength here, which is seen by the size of this triangle. So this today now is an ideal case. We have a clear peak in the spectrum, we have a very good Bartels score for this cycle, and we have a high strength. So this is more or less the picture perfect result of any cycle analysis. So, and that's even if you have last session in mind where I showed you a data set where you had a complete different view. So no clear peak, no good Bartels score. So then you should skip cycle analysis for this data set. But for this data set, that's the opposite. That's more or less the ideal view we want to see if we analyze cycles. Or to make this long story short, if you see this clear cycle in the spectrum, you can use it for analyzing this data set now, doing projection. And that's what I want to do next with you. So we have identified this cycle here, and for sure it shows up here at the top of the list, which is the length score, the amplitude, the strength, and Bartels. So all measures show up at the top. Highest amplitude, highest strength, highest Bartels, clear separation in the spectrum. That's how a perfect spectrum looks like. So that's the cycle we now want to use for this analysis. So let's activate the cycle by adding it to our chart. And before we go into the projection area, let's see how this cycle matches with the data set and the current behavior. So therefore, let's zoom in a little bit and see how this cycle looks like if we go over the full data set. So what I always repeat, and that's important, that the overlay cycle here, which is now the cycle which is plotted here with a length of 243 days on top of the Baltic Dry Index, you should never use cycles to predict absolute price values or ranges. Yeah, we use cycles for timing of tops and lows in the market. So that's where we try to see if we have a good alignment between tops and lows of the raw index with the real data, which just going over these 20 years now looks like a very nice fit between lows and highs in the market. So we don't see big shifts here. Yeah. So if you try to follow this cycle here on the main index and even then updating this to the right, we see that it's even not shifting so much, right? So often, at least in the historical analysis, you need to take into account the cycle shift and more from their phase and from their length. So you won't see perfect alignments between your data set and the cycle, which is common in a normal picture. But here in this case, if you see the green lines I've just drawn to connect the tops and lows from the raw data, and then compare how these tops and bottoms of this green raw data are in alignment from a timing perspective with the main cycle, you see that they are perfectly in alignment. But it's just a visual confirmation. I mean, otherwise this cycle would anyhow not have a stand out in the spectrum. And even you see here, this is now a plot of a static cycle, how perfectly this cycle since 2013, 2012, this static cycle is more or less very much in alignment with major tops and lows of the Baltic Dry Index raw data. So that's a very interesting cycle, I would conclude now, from the Baltic Dry Index. And now, if we have found such a cycle, we don't need to add now more cycles. I mean, in general, you should look out more for the second or third dominant cycle in these kind of data sets, which, if you have this clear view with this clear alignment of this cycle, I would not recommend to add a second or third cycle to do composite cycle analysis. Let's stick with this simple cycle here. So what you would now do is go into the projection area. Yeah, so this is where we are. The Baltic Dry Index is, if you analyze the current behavior, so in the beginning of 2021 was the last low alignment, yeah, which was showing up here. So you see how the last turns have come into play here with the green, or maybe let's use another color that's better to see here. So that's the rhythm of the cycle here, where we are now in this current cycle, with just looking at the last 3 years, which gives us this indication here. So this dominant cycle here now in the Baltic Dry Index gives us a clear indication that it looks like we are at the peak, at the top of the current Baltic Dry Index, which is anyhow has been rallied since the last low. So we should look out for the Baltic Dry Index to turn. So at least that the demand might slow down for global cargo, or the supply might increase so that the prices go down. Whatever might be the case, we don't know, but we should see maybe a peak now in the Baltic Dry Index. And now it gets interesting, because if we know that the Baltic Dry Index in general is a leading indicator for global stock returns, we have leading information. I mean, we need confirmation that this needs to happen. So we need to see a turn in the Baltic Dry Index. Then we can conclude that it looks like the cycle is still in force, and we will have a period at least into the end of this year that the Baltic Dry Index might drop, or the rates of the Baltic Dry Index might drop. So this is a leading information that the stock returns will follow, but this is a lagging information. So we have the leading information that the global economy will slow down if we see a real drop in the Baltic Dry Index, which is then in turn a leading information that the stock markets will follow. Yeah. So, and this is what is really interesting in cycle analysis. And I think there are two key messages I wanted to bring across in today's analysis. So first, please also in your individual asset class you are interested in, check what alternative data sets as leading data sets are available, which in this case, the Baltic Dry Index can be used for the stock markets. There's a lot of research that it's a leading indicator here. Second, please do a basic cycle analysis on these leading data sets. Third, you should have learned to understand if a cycle analysis could be used or could not be used based on how a spectrum chart looks like. I've shown you in the last session's example where you should not use the results of a cycle analysis for forecasting or projection. And today, this is a picture-perfect example where the spectrum or the reading of the cycle spectrum is really useful for projection. And I've explained you best going on the historical data set and the cycle so it can be used. And finally, look out for the next current turns of this cycle. That's also the key takeaway. We never do projections long into the future because we know cycle rhythm will change, cycle phases change. So therefore, we are waiting now or anticipating a possible downturn in the Baltic Dry Index, which is in turn then a leading indicator. We should look out for the stock returns to slow down. So that's the key finding for today. I hope you liked to see an alternative data set, to see how cycle analysis really gave us a picture-perfect view of the past, and how to apply cycle analysis on these kind of data sets. So I invite you to do the same. Please share data sets here or use different data sets or repeat this analysis. Or if you want to go into the details of what's now the leading timing factor of the Baltic Dry Index. So if you go into the past, I mean, you see here, just for example, you see the Baltic Dry Index. Let's have some extended cycle analysis now, I would say, okay? So let's take it out. So here, let's go to a situation before the pandemic, here in somewhere here in August, September 2019. So before the COVID-19 pandemic started, at least in the Western world here. So we had a similar situation. So the Baltic Dry Index went up. We had a picture-perfect up-running global stock market. And what we see here is now the light blue data is not known by the analyzer here. So we look at the spectrum, and that's now the important point I want to make. The cycle with a length of 243 days is not only visible today. The same cycle with the same length was visible 2 years ago. So that's the spectrum nearly looks the same in this case. Yeah. So this is the analysis in 2019, which again we have this cycle clearly standing out. So this cycle was seen years in advance, and so therefore let's select this cycle in this period here. And you see how this cycle in 2019 predicted the top of the Baltic Dry Index here, right on point, and also the low here in early 2020. And the second information is now, you know that the top in the Baltic Dry Index occurred in September, October 2019, I think, where the COVID pandemic started in China. Or not really started, but they started to turn down. And then by end of this year, somewhere here, the pandemic turned over to the Western world. But the Baltic Dry Index already indicated a slowing global stock returns from global companies. So you had this leading information already in summer 2019 as a warning from the Baltic Dry Index that it looks like that the global economy will slow down, lagging. And then in addition, then the pandemic came into play by end of this year, and you know that then we saw a very steep crash or slowdown in the global markets. So I think you always see that if you know the cyclic or the dominant cycles in different data set, if they sum up, yeah, so you have already this leading information that global stock markets will turn down in 2019, and then by end of this year you have this external impact then with the pandemic coming into play. This also then amplifies the dominant cycles by end of year last year. And then you can add the stock market cycle, and you've seen that both have come into alignment by end of 2019. So you should do similar analysis now today. I just wanted to move back in history a little bit and to show you that this cycle was very well visible just during the last year. So this is no special cycle which I just pull up for today. So I hope you can do a little bit analysis on your own. Yes, that's the key topic for today. I think we have spent 30 minutes, and I think this is a special subject. I already did a little bit the summary, so I will now just switch to your questions and see if there's anything new. So Mark and Ken and you Anita, welcome, and thanks for being live and staying live here with me in the session, which is always appreciated. And I would recommend next week, please come and stay and do this live with me, because it helps me to also receive some feedback, some live feedback, which make this session more interesting anyhow. Okay, so I always wanted to see the Baltic Dry Index, but could not find the Yahoo ticker. Yeah, it's you will find it in different ways, so please use it. Yes, a good idea. I will publish it in the idea section, and I will put the link in the video description here below once just I have finished the stream here. So if you're live, just get back in 5 to 10 minutes on the YouTube page, and then you can pick up the link. And then you can repeat what I did here live for everyone. So even if you're new to the foundation, feel free to pick up this link, which will then bring you to the Baltic Dry Index and the cycle analysis I showed here. And do it on your own. Try to learn something on cycle analysis. So thanks for joining me today. Thanks for staying with the foundation for this week. Please like the channel, please follow the channel. As always, we want to grow as foundation. We want to bring out education on cycle analysis. We want to bring out some new ideas on cycle analysis. So join me next week, Monday, same place, same time, same cycle analysis. Thanks for joining. See you next week. Bye.